Today's tip of the week is, what will one investment property do for you?
Yeah, we really want to put that out there for everybody because everyone starts with their first rental property. I mean, we have clients that own hundreds of rental properties, but you have to take action, Tim, and it takes one property. And just getting down to the grassroots of investing in real estate, what will one property do for you?
Well, the first thing we look at is appreciation, and that's what every investor wants, is appreciation of their properties. Sometimes you get it, sometimes you don't. We all know markets are cyclical. They go up, they go down, but Calgary's 75-year average is 3.5%. That's what we base our projections on. So when we help someone buy a rental property and we do the analysis for them, it's on a 3.5% appreciation.
Yeah.
And with that, if you buy a property that's about $550,000, the average house single family home price right now, in 25 years, when the mortgage is paid off, that property will be worth $1.2 or $1.3 million.
Yeah, is it going to get there? We don't know. But we know that this year, Tim, condos went up roughly 10%, single family homes went up 4%. So if you're taking an average townhouse, say, for $400,000, these days you can get really good townhouses down south for $360,000, $380,000. They're renting to cover the costs, which we'll get into. But with a 4% growth rate on 400,000 is roughly 16 grand in appreciation. And then the best thing about investing in real estate that we love, I mean, the appreciation is awesome. You get this magic thing that happens, which the property just magically goes up over time. But Tim, you also get the mortgage getting paid down. And the mortgage is roughly getting paid down around 2% per year. And that translates to around $8,000 to $10,000, depending how much your mortgage is. So you have to remember, even in down markets, as Tim said, sometimes, especially in Calgary, over the years, you guys have been investing in real estate. You've seen it. We've had flat years, we've had great years like right now, and we've had some down years. But even in those down years, when we have held on to all of our real estate, we could sit back and smile because the mortgages are getting paid down. So you have to remember that. And if you're making $8,000 per property with the mortgages getting down, that could add up pretty quickly.
Yeah, and when you're doing your analysis after those 25 years, if you haven't refinanced that property, your property is paid off. So all of your rent, or the majority of your rent, is going into your pocket as cash flow, which is the number 3 rate of return, that why you should buy rental properties. And when we got into this business in the early 2000s, I had the average cash flow per property was probably about $100 per property. They were very, very tight. Rents were low. Mortgages were low as well because the average price to get in was about $250. But over time, as my mortgages got paid down, the cash flow grew and grew and grew. And that's what we're looking for.
Yeah, we couldn't believe it. We were renting properties back in the day for $1,200, full single family homes in, say, Acadia, Haysboro. That was the going rents. Now for that same house, it's upwards. We are going to see a property tomorrow in Southwood that's generating $4,000 per month. I mean, the price tag is huge. It's upwards of $700,000, but it still makes sense to our investor to go in and buy that property. So even in this market with interest rates high, you can still cash flow if you buy the right property. And Tim, the last return that nobody talks about, but our accountants do.
Yeah, they talk about taxes, and everybody wants to pay less taxes when it comes to the end of the year. And real estate is a great vehicle to lower your tax burden. There's tons of things that you can write off. You can write off the interest on the mortgage payment of a rental property. You can also write off any expenses that you have to do throughout the year. If you have to replace a hot water tank or a toilet or anything like that, that's 100% deductible against your revenue with that rental property. So there are ways to reduce your tax burden with rental properties. And as you get more and more and more, of course, these things add up, and it really helps your bottom line because you're deducting everything that has to do with that rental property.
Yeah, I mean, we've got investors investing today, not even worrying about, I mean, they're high net worth people, but not really worrying about the cash flow, but more looking forward to the mortgages getting paid down, the appreciation over time, and the tax incentives. That's our investment tip of the week.